you are there and you're thinking about starting a business, or you currently own a business, sometimes it's hard to balance what do you spend for your life and what do you spend for the business, and how do you set aside the two. It can be very tricky. It was tricky for me as well. The first thing that you should do is get a business account, a business checking account, a business savings account if you have to, and a business credit card. It will definitely help you separate the two a whole lot much better. The reason you want to do that is this is a business. A business is a separate entity from you. You have to think about it as another person. No two people share one credit card. I mean, even if you're married, the other person has a credit card, usually to their name. You may share the same account, but they have their credit card in their name and they can see all their transactions, and you have all your transactions as well in another account. They may be tied together, but they're still separate. So we have to treat the business the same way. And if you get audited, it's important that you have a track trail of every spending that your entity did and every profit that was made versus from your personal life, every expense that you made and every profit that you made from working and doing other things. So it's really good to keep the two separated. And if the business is paying your salary, that is also different. Do not get it mixed up, all entangled together. And the important thing of having it separate as well is that if you plan on selling the company, you have to present to whoever is offering to buy the balance sheets, the budget sheets as well. They need to see a clear path of what you're spending and what you're returning. So providing them that in a separate than what your personal life has going on. If your business is just starting and you have to get it off the ground, of course, your business has not made no money. So you do have to kind of combine your personal with the business. Not necessarily, it's really just taking initial investment from your personal money that you have and putting it towards the business. And the advantage that this has is that the IRS does let you deduct those investments that you have made against your entire list of income. It gets very tax advantageous in a sense. Definitely speak to an accountant about that. There are stipulations that the IRS allows you to do when it comes to investing in your business initially. They give you a few years to get it off the ground and allows you to deduct those expenses against your entirety of income. So there's definitely a huge advantage. The reason they allow you to do that is because anything that they allow you to deduct taxes from, they expect you to make money from, so they can in return get all that money back. The IRS is just kind of like playing the game with you. So the more you make, the more they take. That's just how it works. And I know that it can be very hard, especially in the beginning. So assuming that we're someone making $60,000 a year, we're taxed at the 30% bracket. So we're bringing in 70% of our income. That's approximately $3,500 a month, right? A quarter of that would be $875 a month. Let's say we're saving 25% of our income that we're bringing in. That is where we would actually tap into in order to invest in our business. It wouldn't be from our money for rent or the other bills that we're paying. It's really from our saving. You're going to lessen your saving and putting it towards the business, so that way it can eventually self-sustain itself where you don't even have to do that. But how much of that should you put in, right? Do not stop saving. That's one thing I can say. If you're saving in that 875, maybe put half towards the business, let's say 400, and save 475. Or you could do it the other way around too, where you're putting a little bit more towards the business and still saving. But you should not stop saving, because the whole point is that you're diversifying your income. You're diversifying the amount of money that you're bringing in. And the business is just an additional aspect to that. If you haven't looked at my other videos on how to long-term invest and allow it to grow with compound interest, please definitely take a look at my other videos where I explain all the details on that, but we're not going to go into that into this video. But the savings should be an investment as well. You should be putting it towards different stocks and mutual funds and things that grow is the same way that you're investing this $400 a month into your business, which eventually should bring you a return. And depending on the business model that you have and the type of business, that return can be tripled, doubled. It all depends on your business. So you have to think about the money that you're putting from the savings as just making a diversified portfolio and not really tapping into savings. You have to think about it as you're putting $400 towards another stock or another mutual fund that's expected to grow. And that return can be enormous or it can be slow in the beginning, but the goal is for you to make money. The profits that you make on your business, definitely don't right away take it into your pocket and say, okay, I'm taking 100% of the gains that I made, it's all mine. You should definitely keep reinvesting it into the business. So if you see that you have something that's working, keep pumping money into it to keep bringing the business more and more money, because that's how you're going to eventually get it to self-sustain. That's why a lot of these companies, for the first 5-10 years, they end up being in the negative or the red, because they're continuously investing it back into the company to where it eventually makes money. Like Tesla was in the red for so long, and Snapchat too. Like, we have to analyze these companies, but they're worth billions and billions of dollars. They bring in billions in revenue, right? But their profit, meaning the total losses, was this high versus the total profits was this high. But eventually the goal is to get here. And if you're not consistently reinvesting back into the business, you're never going to get here, because you keep taking the profits out, taking the profits out, taking the profits out. So your business is not growing. You want to help it keep growing so that way it can really self-sustain itself and reach that next level. If you're thinking about it, definitely get out there, start that business, track those balance sheets, keep everything separated, so that way you have a good tracking of what your business has going on as well as what your personal life has going on. I will see you guys next time. Subscribe if you haven't done so already. Drop a comment if you can. Continue to let me know your thoughts and continue to share your great ideas. Peace and love.